Hello, everyone. Good afternoon. My name is Don Forgeron. As Carol said, I'm the President and CEO of Insurance Bureau of Canada and also the President of the Global Federation of Insurance Associations. Absolutely thrilled to be here in such a beautiful city. Thank you to Michaela and her team for the invitation, and a thank you to the Czech Insurance Association as well for hosting us. I was sitting back looking at previous panels, and I was thinking, are we closing the gap? And so one gap we are closing, and congratulations to all of you for sticking in late in the afternoon, because we're closing the gap between now and the reception. So good for you for hanging in. Not much longer. You will all be rewarded. The other protection gap, as we've heard throughout the day, is not closing. It is growing. And there are good reasons. We've heard many reasons why the protection gap is growing. We're going to talk about the non-life sector and reasons why, and many of them are good reasons. The level of risk has grown. The level of regulation that pushes insurers in and out of certain markets has had an impact. Insurance is becoming, in many parts of the world, either unavailable or unaffordable. In any event, it has contributed to the protection gap growing. And my concern and my fear, and we talked about this yesterday at our Global Federation General Assembly, my fear is that our industry is on a path to becoming irrelevant. Every day that we don't cover a loss that forces governments to respond is a day that we become less relevant to consumers and to government. And to give you a quick example, back in my country, back in Canada, we had some pretty severe flooding earlier this year. Not insured, but total losses in the $10 billion range or higher Canadian. The insured loss was less than $500 million. And the bulk of that fell to consumers and it fell to governments. And so we're really becoming marginalized as it relates to compensating and helping consumers return after these catastrophic events. And so that's my fear. That is my fear, that if we continue on this path, those questions will be raised by those in power. Insurance can't solve all these problems. The flood problem in Canada will not be solved strictly by insurance. And we've embarked on a whole of society approach to solving these problems, where everyone has a role to play, consumers, governments, and our sector. But what I'd like to see for our sector is to become more proactive. We need to be leaders in this. An elected official said to me once, if you're not part of the solution, then we're going to see you as part of the problem. And so I think in order to become leaders here, we have to develop those solutions. Solutions that include us, obviously, as part of the answer, but also include government and stakeholders. So to help us talk about some of those issues, some of those solutions, and how we can exhibit some leadership, we have our expert panel representing different stakeholder groups. So we have Ondřej Kovařík, who is a member of the European Parliament from the Czech Republic. We have Ruth Lux. Ruth is the head of public sector, Europe, Middle East, and Africa for Carpenter, USA. I think we've covered all of the world's geographical regions with that. Zuzana Silberová is the Executive Director of Financial Market Supervision for the Czech National Bank. And Steve Simchak is the head of the International Department, Vice President and Counsel for the American Property Casualty Insurance Association. I know there are biographies on the app that if anyone wants to take a closer look. So we're going to start with a couple of short snapper questions that we have not rehearsed, but this is just to warm us up and to get us going. And the first one is really quite simply, I'll start with Steve and work our way this way, just your reaction to the video. They covered a lot of territory, but just some sort of initial reaction to that video.
Absolutely. Well, thank you very much, Don. And you're absolutely right. The video did cover quite a lot. And I think it's important that we hear from all stakeholders, including the NGO community. So I appreciate that they were able to be here to share their message virtually. I had a number of reactions to the video, but it more than anything, I think, reminded me that insurers it's obviously a business, and it's a very noble business, but we also have a social mission in our sector, and dealing with a lot of these issues and reaching underinsured and uninsured populations, I think is one of the, if not the most important part of our industry's social mission. With that in mind, I wanted to just, I suppose I really should mention adaptation and mitigation because it was mentioned in the video and those are important things, but I don't want to focus on that because there's a lot of discussion about adaptation and mitigation, and you all have a lot of information about it. But, you know, on mitigation, insurers are doing quite a lot. I learned just last night, I'm looking forward to learning more about it. I learned just last night that when Swiss Re built its new headquarters in Zurich, they built it entirely from recycled building materials, which I think is quite remarkable. When we talk about adaptation, APCIA, my association, of which of course Swiss Re is a member, but APCIA is very involved in talking with governments at a public policy level, federal level, state level, and international to some degree, about the need for stronger building codes, about land use requirements, considering is this area the right area to build in, considering its proximity or its history of particularly natural catastrophes. So that's important. But I think one part of this discussion about protection gaps that I think sometimes is missing, and it's a relatively new phenomenon, but I think it's important, is the impact of inflation on protection gaps. I think it's having a profound effect and is going to have a continued profound effect. And inflation obviously is not just a product of climate risks and climate events. It's also a product of supply chain issues. It's a product of the invasion of Ukraine. It's a product of the pandemic. So there are a lot of reasons that we're seeing inflation, fiscal and monetary. But it's having an enormous effect on our sector and on underinsurance and uninsurance. In the US, we're now at a 41-year high in inflation. So the last time we saw inflation this high in the United States, Don and I were hitting the town, rolling up the sleeves of our jackets and wearing acid wash jeans. I mean, that was that long ago. This was a long time ago. You know, building material costs and other products that insurers often pay for, the price of those materials, they're going up even faster than CPI, than core inflation. So building materials are up 44%. We're seeing labor costs go way up. And we're seeing auto part costs going up. We're seeing fuel costs go up. And all of this is having a profound effect on insurance penetration, on insurance, underinsurance and access to insurance, particularly for small and medium-sized enterprises, and as well as homeowners, individual homeowners. We just did a study at APCIA, a survey, a nationwide survey, and the results were quite surprising. We learned that more than half of homeowners in the US have not reviewed their insurance coverage, their homeowners' insurance coverage, to account for inflation, to make sure that they don't need to increase their inflation. And then beyond that, even homeowners who've made additions or made improvements to their homes, which is definitely the type of activity that would necessitate a review of your insurance coverage, only 40% of them have. So we're seeing insureds not taking on board the lessons of inflation, the impact of inflation in their insurance decisions, and we're seeing SMEs being hit by inflation. And I think that means that we really need policymakers, central banks, and elected officials to tackle inflation. Otherwise, it's going to continue to exacerbate the insurance protection gap.
Great. Thank you, Steve, for that. Ruth?
Yeah, thanks, Don, and thanks to Insurance Europe for organising this event and also to our Czech hosts. So as Molly mentions, we really can't afford to ignore left field risks. One of the key lessons that has been learned from the pandemic is that there's a constant need for the insurance industry to innovate and to adapt. If we think back to the last 7 years ago, we weren't talking about pandemics, cyber, or conflict in Europe. So if we want to continue to be relevant, as you touched upon, Don, then it's really important that we find ways to address and understand these challenges and to innovate. So in response to the second question in the video, the potential impacts of climate change and the required adaptation has been on the radar of the insurance and reinsurance industry for a very long time. If we're really going to look at the increased frequency and severity of these events, we need to continue to plan for how we're going to address this increasing risk in the future. As Lucy mentions, adaptation is not at the level which is required. What's required to happen is not simply adaptation, but adaptation at scale. Swiss Re noted recently that for every dollar invested in adaptation, you get $5 downstream. So it really is doable. In order to scale adaptation, greater investment is needed, and one important area that we can consider is that of nature-based solutions, which not only provide security for those communities that need them, but also really help put in place plans for the future. And lastly, in answer to the third question, as Molly mentions, we need to be aware of the next crisis coming down the track. So if I were to choose one action to reduce the natural catastrophe protection gap, it would be to foster insurance innovations that can reduce and respond to a changing risk landscape. Insurance innovations need to incorporate a dynamic, long-term, and adaptive view of risk, and that needs to be incorporated into our modeling and pricing. Applications should include the improvement of risk analytics and modeling, more accurate forecasting capabilities, and allow the speeding up of claim settlement and payouts.
Great, thank you, Ruth. Zuzana, your reaction to the video?
Yeah, thank you. At the beginning, I would like to thank for kind invitation for this conference, because it is always useful to discuss these important topics more or less informally. Regarding the question on videos, I can say that insurance companies play important role in climate change, but it should be, and it is visible even from the discussion of our previous speakers, that it is not about only insurance companies or reinsurance companies, but of course it is necessary to have involved or relevant competent authorities and government and ministries and whatsoever, and all needs to work together for, I would say, action regarding the climate change. But on the other side, what is necessary to mention that insurance companies and reinsurance companies, they are right to, I would say, decide up to which scale they are able to undergo the risk, because they are responsible, of course, for the management of their risk profile and solvency position and everything what is connected with this. And that is the reason why we should together discuss the protection gaps, because even there is the important role of clients, the awareness of clients that insurance companies are able to provide the protection for them, especially to be better protected, for example, against any catastrophic events. And as in our country was visible that some clients are not have the insurance of their property insurance at all, or they are highly under, I would say, insured. And from this perspective, the awareness of importance of clients' protection from the side of insurance companies is very important. As well as during the COVID crisis, insurance companies shows their ability to adjust to the, I would say, changes within the environment, and of course through the digitalization, they approach and try to approach their clients to provide the services in various forms. But at the same time, they are responsible for risk management related to the usage of these digital tools, and it is connected with, for example, mis-selling regarding the client's approach, or cyber risk in case that you use so much IT tools and you need to be sufficiently protected from the perspective that insurance company is a financial institution from this perspective. So there are a lot of things, and of course, last but not least, insurance companies play important role in awareness of the existence of insurance, in financial literacy, the explanation of the importance of the insurance, and from this perspective, we as a supervisor can provide our support, because of course during our supervision we provide the feedback. We try to be not formalistic, but to be able to adjust to the development of environment from various aspects. As was mentioned in videos before the break, I would like to mention very important fact, and it is the proportionality aspect, because as a supervisor we are responsible and have to be able to adjust and assess the risk profile of concrete financial institution according to its scale. So all these facts from the supervisory point of view we need to into account to be able to be even to fulfill our responsibility as a Czech National Bank, but on the other side to play our responsible role even to the society. Thank you.
Thank you, Zuzana. And the previous panel talked about the importance of raising awareness, and I suspect that's a theme that runs throughout, whether it's life, non-life, and so on. Ondřej, can I turn to you for your reaction to the video?
Thank you. First of all, I would also like to thank for the kind invitation. I'm representing the European Parliament here, but I'm also a parliamentarian from the Czech Republic, so welcome to Prague. And I hope that you enjoy your stay here. I think many things were already said by previous speakers, but in terms of some key takeaways from the videos, I would definitely mention in the first place prevention. It was mentioned here, and I think it goes sort of all the way through horizontally to a number of topics that were mentioned by fellow panelists here. And I think we have a role to play here. One of the, in my view, key lessons learned from, especially from the pandemic, was that there are threats, there are events that actually require very close public-private cooperation. And I think this is exactly where, in my view, from the point of view of legislator or the public administration point of view, we have to invest much more into really creating a workable and functioning partnership between the public and private sphere. And in my view, this is exactly where the interest of businesses, insurers, and the public interest of public authorities can meet. In terms of prevention, for instance, it has been mentioned, there's a lot of things that the insurers can do when they work with their clients. But I think also from our point of view, we can actually sort of take this angle and embed the prevention angle in designing public policies already in advance. And I think this is very, very important. Another takeaway from the videos is the emphasis on resilience. We hear it in many occasions, but I think in general, this is about resilient societies, resilient economies, and in my view, this is something that goes very close, hand in hand, with closing the protection gap. The more society is resilient, the lesser protection gap is actually there, and I think we should also focus very much on that. It's actually, I think, not by accident that one of the first immediate reactions on the European level to the pandemic back in 2020 was actually establishing the so-called Recovery and Resilience Facility, an enormous extra budget instrument that has been able to mobilize up to almost 700 billion euros to help the member states to go through the recovery of economies hit by the pandemic, but not only that, on a mid and long-term view, to actually invest and strengthen their resilience. And I think this is exactly where we need to focus our attention to, and it has been mentioned by the speakers in the video, and I think, again, this would require a very good, close cooperation between the public and private authorities, but I think that should be our ultimate goal, to enhance and build a resilience in this regard, and that you can look at it from various point of views, and you can actually, even from the business point of view, in my view, this is something that goes well beyond the business rentability of a project or business rentability of companies. It has to include many more views in order to make sure that the strategy and the products that are rolled out by the businesses are actually helping to build this resilience. And I think it goes basically the same for other global challenges that we currently face, including the climate change.
Thank you, Ondřej. I'm going to pick up on the resilience theme. We had a question that we were going to ask, but we're not going to ask because I asked it backstage, and it would have either killed the panel and we would have walked off the stage, or it would have continued. And I asked them if they were optimistic that we could actually close the gap. And you'll be happy to know that they're all very optimistic, so I don't need to ask them that. We can move on to the next question. But picking up on the resilience theme, Ruth, reinsurance can play a really important role there at the national level. So from your perspective in that public-private space, what can you tell us about the role that you think reinsurance can play in increasing resilience?
Yeah, thanks, Don. So put simply, reinsurance can play an important role in bolstering national resilience against a backdrop of COVID-19, cyber, climate, and the Russia-Ukraine conflict. It's clear that we need to define what it is that we mean by resilience, whether we share risks and costs appropriately between sectors, whether we regulate well for resilience, whether our efforts are underpinned by the best data and analytics, and whether we innovate and communicate as we ought to. This is a pivotal moment for re-energizing resilience efforts at the national level. In order to secure long-term well-being and prosperity, a whole-of-society response is needed in mitigating critical risks and being prepared for the next crisis. For governments, the key to efficiently and effectively exercise their public power lies in balancing costs, in regulating for resilience, and adjusting data sharing arrangements to ensure sharper crisis management. Disaster risk financing and public-private partnerships can open new opportunities to unlock risk capital and expand risk transfer solutions. Now, in all of this, partnering is key to tackle the most pressing challenges of the day. And new thinking by insurance professionals, by capital providers, by policymakers, regulators is needed to ensure that we're creating win-win arrangements. A variety of risk capital and related risk management services are required to address the growing level of risk faced by society in today's world, so that we really can look to make more resilient risk transfer solutions. There are a number of unique attributes from a variety of stakeholders, including the public sector, private sector, insurance and reinsurance, ILS capital, and government entities, which can be harnessed to bring innovative risk financing solutions to bear. We work with many different national governments at all levels to identify risk and help those governments assess and quantify their risk and how much they hold on their balance sheet before then pricing it and moving it into the private sector. And this is risk transfer. And this ultimately can help governments manage their debt and their contingencies.
So Steve, I know you wanted in on this. Do you share that view, and how do you think those gaps can be addressed so that reinsurance can fulfill that role?
Well, I think it's a great question, and Ruth, those are some excellent ideas. I think mine actually fit quite well with them. The one thing that continues to surprise me when we talk about closing the gap around the world, so not looking at any particular market, is that when you have insurance and particularly reinsurance groups from New York or from Bermuda or London or Munich or elsewhere, global insurance and reinsurance groups, you often find a lot of excitement about reaching uninsured and underinsured populations around the world in other markets, not their home market. And you often find that the governments of those markets, the foreign markets, will often say, we want insurers and reinsurers to do more to close the insurance protection gap. Insurers should be doing more to close the insurance protection gap. So that sounds like a great match, right? Except that when the insurer or the reinsurer goes to that foreign market and says, we would like to enter your market and offer our services and help you build your insurance sector, help you reach insured and underinsured, a lot of times they find another message when they arrive at the door. It's actually thanks, but no thanks, you're not welcome. And this is really quite surprising. There's a conflict there in these two approaches that you hear from the same government, sometimes even the same ministries within a government. That's really quite surprising. And you know, it's like if somebody asked me to bake them a cake at their house, and then I showed up and they won't unlock the kitchen. I mean, you know, if you want the services and the help of global insurers and reinsurers, you have to be able to get into the market. So instead of finding a welcome, oftentimes a global insurer, reinsurer will come to a market that may be particularly affected by climate change, may be underinsured. And instead they say, well, you can come here, but you're going to have to cede 100% of your reinsurance to a local reinsurer. You can't diversify that risk geographically. And that's a big issue. Yoshi Kawai is here from the OECD and was on the previous panel, and that reminded me that the OECD Insurance and Private Pensions Committee did some excellent work, I think starting in 2009 and then ending, I think, just last year, on the importance of cross-border reinsurance to risk diversification for natural catastrophes. And it's quite important. I mean, insurance is a global industry. Reinsurance is a global industry. And if you can't get the risk outside of a market through global reinsurance or insurance networks, that risk is then concentrated there. And if you have a market that's very exposed to natural catastrophes, that not only are you going to have that risk captured there, but you're not going to be able to reach underinsured populations in that market. So reinsurance, cross-border reinsurance, is really the foundation of reaching uninsured and underinsured populations in many markets, but it's not there. But even beyond reinsurance, they may find when a group arrives in a foreign market, they may find, oh, you can come here, but you have to store all of your data here. You can't move your data outside the borders of this country, so you can't utilize the best insurtech outside of the market. Or there might be an equity cap. You know, you can come here, but you can only own 26% of the group there. Or there might be unfair competition with a state-owned enterprise, a state-owned insurer or reinsurer. And all of these things serve as barriers to the ability of the global insurance and reinsurance market to close the protection gap around the world, particularly in the face of growing climate risks, which I think is quite troubling. And I would say, I know that we're in a difficult position right now when it comes to international trade agreements and international trade negotiations. Market access and trade agreements are out of fashion right now in politics, and that's a fact. And I think that is really too bad, because even going beyond insurance and thinking about the wider economy and the effect of international trade in the wider economy on poverty, I think of the hundreds of millions of people around the world who've been brought out of poverty through international trade, and that doesn't seem to be a priority today. If someone is kept in poverty, they're not going to be able to afford insurance. If they're brought out of poverty, into the middle class, into a sustainable lifestyle, they will be able to afford insurance, and they will be able to secure their business or their family or their community. So I hope that there'll be a change in the thinking on international trade broadly, and for insurance and reinsurance in the coming years, and we can again close the protection gap through that market access.
Thank you, Steve. Zuzana, if I could turn to you for a regulator perspective, and I was doing a little bit of reading this morning on some of the events that you've experienced here in the Czech Republic over the last 10 years or so, with very large floods in 2012. I thought it was a misprint, but a very large tornado here last year, the largest ever, which was unheard of. Have there been any lessons learned through these events in terms of resilience building, and plans for the future?
Yes, so of course, regarding the tornado, it was a very surprising event, but with a huge negative impact on a specific region in South Moravia, that's true. But from the perspective of insurance companies and their approach, I think that they approach this situation with highest level of responsibility. They approach the clients, they move practically and open the counters in South Moravia to be the closest to the clients, to help them to get through this difficult situation regarding the liquidation of claims and everything what is connected with this. From a perspective of a supervisor, we practically didn't get any complaints from the clients that insurance companies would behave in that time in a bad way. So from the client's perspective and conduct of business is very good, I would say, information and experience. And regarding the resilience of insurance companies, I can say that that the occurrence of these catastrophic events in our country is not so rare. I can say that during the period the insurance companies developed their reinsurance program and the reinsurance scheme in a relatively good way and form. I can say even from the supervisory perspective, we conduct on a regular basis our stress testing exercise with relevant market participants. Up to this, I would say, year, we cover more than 90% of our industry market. And of course, the ability to manage the catastrophic risk is one of the important parts of this, I would say, stress testing. And we use the information from this stress testing even for the concrete dialogue with specific institutions, because from this stress testing exercise we got a lot of useful information regarding their risk profile and sensitivity of risk profile of concrete insurance companies. So I think that mutual cooperation and understanding of supervisory role and the role of insurance companies, finally the situation and position of our insurance sector from this perspective and past experience is very good. But on the other side, what is very important, as I already mentioned in my first answer, it is the awareness of clients that insurance can help them and protect them. Because the tornado event shows that we have a lot of people which are uninsured or which are without any insurance. And from this perspective, I think it is the role and place for the improvement of the awareness and the role of insurance from this field and perspective. But what is, I think, necessary to mention here, even in relation to previous speakers, that as I mentioned, good reinsurance scheme for insurance companies, the higher, I would say, occurrence of such kind of events, it brings together that the price for the reinsurance will be very, very high. And finally, it could go into the price of premium written for the specific kind of insurance. And from this perspective, we have a protection gap practically. And it is something what is necessary to solve. And I think that this discussion and even the further work on this field can help and move further for finding of some kind of solution. But in this stage, I think from the perspective of Czech Republic, the awareness and importance of insurance is a very, very, very important field and aspect for our nation, I can say.
Thank you, Susanna. There's no question the importance. I guess the challenge that we have is making sure that it continues to be affordable in a world where these storms that we talk about are more frequent, are more severe, and that's a challenge, as I said at the outset, that we all face. Ondřej, you mentioned before we came on stage how the pandemic has got you thinking more globally about some of these issues. Do you want to share a little bit of your thinking with respect to that, as well as how it relates to closing this gap?
Yes, indeed. Actually, I think that's definitely one of the lessons learned, in my view, from the pandemic, is that we can actually, in this still, I think, highly globalized world, can face a threat and a risk that has a highly global nature. And if you look at sort of a development on how we reacted on the pandemic, the immediate reactions were very local. That's where we have the executive powers actually to react immediately. But I think we realized quite soon that it's not going to work. It can actually help to tackle the immediate threat, but it cannot actually help to find solutions. So then I can see that, at least from the European point of view, where the national governments immediately started to react, going very often against the overall general policies that we have on the European Union level. But then after a couple of weeks or months, then they just, all came together and started to discuss what should be the European response. And then you saw the European leaders reaching out to other leaders all around the world, how actually we can solve these issues. And then I think the perfect example, for instance, with the vaccination rollout, the investments from the public authorities into vaccinations, and also the idea of initiatives such as COVAX to cover with vaccinations also those regions and countries that do not possess enough means. I think this is exactly how the reaction to global threat looks like. And in my view, this is a big lessons learned from the pandemic, which we can apply to a number of threats, which by definition become global or are already global, including the climate change. It has been mentioned that the insurance industry is pretty global. And I think this is something that we should also bring from the side of public authorities and enhance cooperation in this regard as well. But that I think was one of the, let's say, key takeaways that I identify when reflecting back on the pandemic, how it actually evolved. But I think there are also potentially other issues that we can make sure that we use more in order to tackle and face the challenges which have the same nature. And I think in this regard, for instance, the better use or more targeted use of digital technologies and innovation. There were many tools elaborated across the world which helped us to actually face the pandemic. We've in the European Union level, we elaborated so-called digital green certificate. I think basically it was a COVID pass that you could have show to authorities in order to manifest that either you were vaccinated or you actually passed the disease and you have the antidotes. But it was basically a certificate to show that you can enter various facilities, and it was accepted all across the Europe. And again, quite a simple, but on European level, it was a groundbreaking solution because it allowed put together data of citizens and public authorities of 27 member states, which sometimes is extremely challenging. And we managed to do that. So I think this is also one of the directions of travel, also from my point of view, in terms of how to design public policy responses to those challenges, to actually make better targeted use of digital technologies. And I think I fully agree. It's also about the use of data. Public authorities are gathering an incredible amount of data, but usually public authorities are incredibly bad in terms of handling, analyzing, and designing public policies based on that data. And this is something where I think the businesses, and especially insurance business, is actually very good at. So that could be also one of the platforms where we can join the effort, bring what we have to offer, and actually combine that for a joint answer to the challenges that we face.
Excellent. Thank you, Ondřej, for that. I met Ondřej about half an hour ago for the first time, and he hasn't seen my notes, but he's providing the perfect lead-in to the next question every time. So thank you for that, Ondřej. I want to probe a little bit deeper about these public-private partnerships. Right? We've talked about how, whether it's non-life or life or health or whatever it is, that's what's going to be required, that we can't solve these problems alone, and elected officials can't solve these problems alone. So a few questions for all of you as we wind down the panel here on the role that governments can play. So Ruth, let me start with you again. From your perspective, the role of government intervention, good or bad, more or less, better than insurance, the same as insurance? What's your perspective here?
Great, thanks. So let me start by saying that it's clear that the threats we face today do not stop at borders. They are indiscriminate in their reach. They're far too great for individuals, companies, or single countries to tackle individually. And I'd like to add that there's also an acceleration of pre-existing critical global risks coming over the horizon. And these affect businesses and societies, such as digital dependency, cyber, civil unrest, geopolitical interactions. So there's going to be an increasing narrowing of opportunity to deal with these risks. Protection gaps have always existed, and we should avoid considering all of them as inherently bad. There may be good reason why individuals have chosen not to insure against all of their economic vulnerabilities. In terms of solving protection gaps, increased insurance is certainly one method, and mitigation is the other. For governments, providing financial protection against risks that are uninsurable by private insurance and reinsurance markets alone involves a choice between supporting an insurance solution or distributing funds to those that need them the most. Now, an insurance solution can have a number of advantages over direct government financing, particularly where government support mechanisms have been established quickly in the context of an ongoing crisis. An insurance solution could provide ex ante certainty and transparency over the level of benefits that are going to be distributed. And they can also leverage the existing claims payment infrastructure to deliver those benefits quickly, particularly if the trigger is clear, such as in the example of a parametric coverage. An insurance solution could crowd in capital from the private market, from the insurance, reinsurance, and capital markets into absorbing some of the losses, even in cases where the majority of the risks are borne by government. And an insurance solution could also provide incentives for policyholder risk mitigation through premium discounts. Importantly, and I think this point was raised by Claudia in an earlier panel, what's needed here is to have all the stakeholders at the table and for us to collaborate to find the appropriate solutions.
Thank you. Thank you. Steve, same question to you. The role of government in these partnerships. More, less, the same? What's your view?
Well, thanks, Don. And I think that we take a little bit more of a skeptical role of public-private partnerships than Ruth does, but always good to discuss and debate these ideas. I think that insurers should and can have a role in confronting pandemic risks in the future. Insurers bring data that Ondřej mentioned and the ability to use and analyze the data. We bring the tools and the technology and the modeling, which I hope for the future pandemic, the next pandemic, will be deployed to help societies respond to and then recover from pandemics. And Ruth mentioned that when governments react or create a program or a response mechanism in the middle of a crisis, that it tends to have a lot of downside. And I certainly agree with that, and I think that governments did the best they could do in the circumstances, being totally unaware of that the pandemic was going to hit and the scale of the pandemic. But I think it's important that now that governments and industry look back at the lessons learned from the pandemic and that we catalog them and learn from them for the future. We're working on a white paper now about how government support could have been more effective, much more effective, if it was, instead of spread out across the whole economy, targeted at those businesses that were most affected by the pandemic. So here we're mostly talking about in-person services industries, so things like restaurants and dry cleaners and barbershops and hair salons. They were the most affected, so if the support could have been more targeted at them rather than just across the whole economy, we think it probably would have been more effective. And it also would have gotten to those parts of the population that are most vulnerable to economic downturn as well. So I think it's important that we learn that, but talking about a public-private partnership, I think what we're really talking about is business interruption insurance. There, I think that it's become increasingly clear that pandemic business interruption risks, if we're talking about non-damage pandemic business interruption, really is uninsurable by any metric or any criteria of insurability. And I think there's widespread agreement with that. I like to remind myself that to pay for 3 months of business interruption losses during 2020, the insurance industry globally would have had to start saving business interruption premiums in 1711, 38 years before the French Revolution. And by the way, in that time, would not have been able to pay out any other business interruption claims because they were saving it for the pandemic of 2020. If we were talking about 6 months, if we wanted to cover just 6 months of 2020, and now this pandemic has been going on for years, if the global insurance industry wanted to pay for all those BI claims, they would have had to start collecting and not paying out any BI claims, collecting premium dollars in 1522, 30 years after Columbus sailed the ocean blue. So it's pretty clear that these are not insurable risks. Now that brings up the question of whether insurers could take some skin in the game, some piece of the pie, and insure some small piece of it. Well, there are a lot of issues that come up when you start to design these kinds of programs. There are a lot of questions, is this going to be a compulsory program? What's the distribution mechanism? There are a lot of questions that come up. And two of our colleagues, two of the counterparts to APCIA, they developed excellent proposals, I thought. I mean, really well thought out. Not that I agreed with every proposition in them, but really terrific proposals. They answered all the questions in different ways from one another and really thought through it. But ultimately, those proposals were not taken up by their governments because businesses, the prospective policyholders, if you will, they said, well, the cost is too high for coverage that's too low and for a risk which we don't feel is going to hit us again in the near future. So they see the risk as too remote. Now, we might disagree with those businesses, but they are constituents of governments, and the governments involved in these cases decided not to pursue those plans, despite the fact that they were excellent, really well thought out plans. So I think that highlights the fact that it's very difficult to design a plan that's going to work. The industry hasn't been able to do it yet. And I think that there are a lot of perhaps unintended consequences that come from public-private partnerships. We have some in the US, and we're not going to sit here and debate them today, the pros and the cons, and there are both. There are definitely pros, but there are also cons. But there are unintended consequences that come from really enmeshing private industry with government. So I'm not saying public-private partnerships are a bad thing by any means, but I think that we should have public-private partnerships only for those risks where a public-private partnership is both necessary and effective. And in this case, I don't think that a public-private partnership for pandemic risks would be effective. That doesn't mean that insurers can't help. I started out by mentioning some areas where I think insurers can help prepare for the next pandemic. And perhaps there's a way that whatever government officials create to respond to the next pandemic, maybe insurers can play an administrative role, on the back end to help distribution of the payments or something like that. But not as an underwriter. I think it's become pretty clear that insurers really should not have a role as an underwriter for BI pandemic risks. I should qualify, I'm only talking about BI here. I'm not talking about life insurance or other types of insurance where obviously the risks that come from pandemics definitely are insurable. But on BI, the big question, the big hot tamale question, I don't think insurers have a role as underwriters.
That was clear. Thank you, Steve. Zuzana. A regulator's perspective on this theme of public-private partnerships. Your thoughts?
I think a private partnership, it is something what could be one potential solution, how to approach the protection gap. And from the perspective of supervisor, we keep the neutral position. It means that our role is to assess which kind of risk concrete insurance companies, I would say, undergo, understand the risk profile, according to this assess I would say, solvency position and concrete risk management in specific situation and in specific products and specific type of risks. So our approach will be practically the same. And our role is to understand the substance of such kind of projects and the impact of participation of insurance companies on these projects on its financial position and what this participation brings even to the clients and to the insurance companies as well, and to balance both, I would say, point of views.
Thank you, Zuzana. Ondřej, if I could turn to you, and I'm going to try and combine a portion of one of the audience questions with a question of my own. And my question was to take the idea of public-private partnerships and apply it to a very practical example, something you've done a lot of work on, which is that of cybersecurity. And we know that the cyber protection gap is massive. And the industry on its own is not likely going to be able to close it in a significant way anytime soon. So the question, I guess, is kind of twofold. Do you think that this is an opportunity for public-private partnerships in the area of cyber? And to steal a bit of the audience question, when it comes to these, maybe you can give us some political advice, which is who should be making the first step? Is this something, I talked at the outset about the industry, I think, needs to, exhibit leadership and come forward with solutions, but is that enough? Do we need elected officials to be doing the same? So who's leading that dance, if you will?
Thank you for the question. For some reason, I was starting with thinking of a chicken and egg problem, but we may get to it. I'm slightly more optimistic on the public and private partnership than Steve, for instance, and I was trying to advocate for it the entire panel. But I really think that this is actually the way forward, because I think that the latest events and the threats and the risks and challenges that we face, be it on a climate level, be it a pandemic, but also as we see it more and more these days with the war in Ukraine, it actually sort of shows that the role of states, the role of governments, and the role of public administrations has changed. And also, and this is just, I'm saying that as a representative of the European Parliament elected in 2019, massively, especially by young voters across Europe, putting young MEPs into their role. The expectations of citizens, societies, towards the governments have changed as well. And I think we're leaving more this rather liberal point of view of having a small state administration and next to the businesses that will flourish if they have the proper environment to do it. But I think the current events actually show that there has to be more involvement of the public authorities. And being myself a long-term public servant before becoming an MEP, I know how difficult then it is, because these are clashing cultures. These are two different environments. But I really believe that given these expectations that are higher from the citizens, given the change in nature of the challenges and the answers that are actually evaded also from the public authorities, there has to be more willingness for public-private partnership. And I think you mentioned cyber. In my view, this is a very good example. I think to start, shooting in my ranks, I think the public authorities should be those, trying to make the first step, but it should not be the paternalistic step, showing, like saying this is the way forward and everybody has to follow. I think that's not how partnership should work. It's really about bringing the two parts together. But I think if you look at the cyber issues, we have various potential risks and potential threats and incidents that can be actually linked to the cybersecurity issues, and some of them can be critical to the state authorities, the state security, and this is something that is very much close linked to the national defense and national security issues. But some of them can be critical for the functioning of the economy and can be critical for the functioning of the businesses. And I think we are just finalizing on the European level something that I'm pretty sure that you are all aware of. It's called DORA, Digital Operation Resilience Act. And when we saw the initial proposal from the European Commission, there was a lot of misunderstandings there. Are the public authorities not trusting the businesses enough, to prescribe what and how they should deal with cybersecurity issues, how to make sure that their IT systems and the management is actually resilient enough. And I got a lot of feedback from the industry, showing examples of how advanced many stakeholders and many operators already are. And I think this was also maybe revealing or eye-opening for public authorities, including the European institutions, to see that we are actually not entering the uncharted territory, but there is actually a lot of done on the business side as well, because it's critical for the survival of the businesses, and it will be more so. So I think, but at the same time, there is new expertise that you can bring from the public point of view, and I think their idea as well is actually to create, and that's always what we are trying to do on the European level, a harmonized approach. So something that can actually help to develop cross-border activities and to standardize your approach, standardize your procedures, operations in this regard. So I think that would be my first reaction to that.
Thank you so much, Ondřej. Ondřej and Steve will be found during the reception at the bar talking about public-private partnerships and the importance of having them or not having them. We are out of time, but before I thank the panel, Steve Simchak is the chair of our cyber working group at GFIA, and I will not be able to sleep tonight because he'll call me if I don't give him at least 30 seconds to say something about cyber. So Steve, we have a clock, so we have 30 seconds. That's cruel, but
This is a challenge. I've never been known to talk for less than 30 seconds about cyber. I am the chair of the GFIA Cyber Risks Working Group, but it would be impossible to be the chair of the working group if it weren't for Insurance Europe, our hosts, and their work on the Cyber Risks Working Group and other members of GFIA. So it's certainly not my show. It's a group show. No, I'm optimistic about closing the cyber protection gap. I mean, we see direct written premiums are soaring in the U.S. Obviously, claims are also soaring, and the protection gap may be getting larger or smaller in any given month on cyber. But I think that as the market continues to grow organically and evolve organically in response to the risks, the protection gap is going to close as long as markets are allowed to grow organically. And that's also going to happen with increases in cyber awareness and increases in cyber hygiene, both of which our industry is providing. I would just one final plug for the GFIA Cyber Risks Working Group. Last year released a report on different cyber awareness campaigns around the world and best practices, if you will. So I hope people will check that report out and learn about what's the best way to do a cyber awareness campaign in your market. Thanks, Don.
Thank you, Steve. That was very unfair of me, and it was very kind of you. Thank you all. I hope this was helpful. I hope this was provided some insights as to some of the challenges that face us. I think it's suffice to say it's better in person than seeing us all on a screen. I forgot that I was actually on stage. I thought I was in my home office looking at the screen, so much nicer to be able to do this in person. But would you please join me in thanking our guests?